In today's video, I'm going to teach you how to record refunds in QuickBooks. Refunds in QuickBooks are all about mirroring the original sale so your income and bank balances stay accurate. The key idea is simple. You want to reverse the revenue from the sale and show the money going back to the customer without throwing off your reports. In this walkthrough, we'll focus on the most common scenario. Your customer already paid an invoice and you need to return their money. Start by opening QuickBooks and going to the plus New button. From there, select Refund Receipt. This form is specifically designed for paid sales that need to be reversed, and it automatically handles both sides of the accounting. It reduces the income tied to the original sale and shows cash leaving your bank. Choose the correct customer from the customer field, the same one who paid the original invoice. This keeps the refund connected to their history and makes your records easy to follow later. Next, add the same product or service that appeared on the original sale, matching the item, quantity, rate, and any tax settings to what you sold ensures your income is reduced in the exact same category and the numbers reconcile cleanly. If the refund is for a partial amount, simply adjust the quantity or rate to reflect what you're returning. Enter the refund amount so it matches what you're giving back. Take a moment to confirm the date on the refund receipt, because that date determines which reporting period the reduction in income will appear in. Now, select the payment method you'll use to return the funds, such as check, credit card, or another method available to you. This choice helps you track how the money left your business. Then, choose the bank account the refund should come from. Picking the right account matters because it directly reduces that bank balance in QuickBooks. When everything looks correct, save the refund receipt. Behind the scenes, QuickBooks decreases your income for that product or service and records the cash leaving the bank account you selected. On your profit and loss report, you'll see the income reduced for the same category as the original sale, and on your balance sheet, you'll see the bank account reflect the outgoing money. That's it. By using a refund receipt for a paid invoice, you cleanly undo the revenue from the original sale and properly show the payment flowing back to the customer, all without distorting your books. Take a moment to review the customer's profile afterward to see the refund listed alongside their past transactions, and you'll be set.